Wednesday, July 1st, 2020. This is the day we're conducting this interview with Lynette Zhang. She's the Chief Market Analyst at ITM Trading. Before I start, I'd like to say a belated Happy Canada Day to all my viewers in Canada. This morning I made my video and I didn't realize it was Canada Day. I didn't even have the Canadian pillow showing, so now it's showing there. So hopefully I didn't upset too many people. Anyway, it's really nice to have Lynette Zhang. I was on her channel, interviewed by her a few months ago, and now I'm interviewing her. Lynette, thank you for coming on my channel. Could you say a little more about yourself? I'm sure.
Oh, sure. First of all, I'm very happy to be here. So it's good to be together again, because I know a lot of my viewers really like your work. And so thank you for having me. But I would say that I've been in these markets on some level pretty much my whole life. And I'm 65. And, you know, I'm the Chief Market Analyst at ITM Trading. But there is an advantage to having been around as long as I've been around and as long as you've been around, because we've seen this before. And so what we like to do, we're super keen on education at ITM Trading, but I'm an ex-stockbroker, an ex-banker, and I've studied currencies since 1987. And I developed a strategy for myself based upon repeatable patterns through currency, currency life cycles. And it's once you know what to look for, then you can see that currency life cycle shift and where we are in it. And we built a strategy that we utilize at ITM Trading based upon all of those repeatable patterns. So we're keen on education. We're keen on having a plan and using real money, gold and silver, to give us the ability to survive the reset that we're walking through and even take advantage of the opportunities that present during these kinds of circumstance.
Yeah, as you say, survive and thrive, right? And
yes,
just wanted to tell you, my wife really loves your show. She's the one who actually told me about you. I think I had heard of you before, but then I started watching. She watches you every day, by the way. So,
oh, wow.
Yeah.
I'm honored. Thank you.
I'll tell her. So my first question, and over here as well, on my channel, I'm trying to educate people about the monetary system. I grew up in Brazil, and currencies were much more important in Brazil than the stock market, because our currencies in Brazil were really rubbish. I think in the last 50 years since I was born, or 55 years, we've had maybe 3 or 4 different currencies. So people in Brazil, if you want to protect your savings, you have to have dollars. They're not as much into gold, but I think they should change that anyway. But my first question is, seeing that both you and I focus on the monetary metals, can you tell us and my viewers the importance of monetary metals in lieu of what's happening today? I mean, I just saw that the Fed came out with its minutes today, and they said that they're going to keep policy very accommodative.
Right. So, and what that really means is that they're telling you they're going to destroy whatever value is left in that currency. And that's really, it's the purchasing power value. It doesn't matter how many dollars you have. What matters is what you can buy with those dollars. So what they're really saying is, we are going to create an unlimited amount of new dollars, and we're going to keep interest rates really low so that you're not going to be able to save anything for the future. They're telling you they're destroying the currency, the money. So the reason why gold and silver are so important is because that's been money for 6,000 years. The current monetary system's only been in place for a few decades. But, and even if you want to go back, because it's kind of morphed, but to 1913, whereas gold has been money for 6,000 years. It meets all the criteria to be money. And if you want to take advantage of those opportunities, if you want to have a real tool of barter to work with, to buy food, to buy water, to buy all those things that we need, then you have to have real money gold that the central banks cannot destroy. Governments and central banks create fiat money. Fiat means by decree. It's government money. And it's designed around inflation. I mean, inflation is a key component of all money, but we're at the end of this life cycle. That's why you see all the insanity that's happening now. We're at the end of the currency's life cycle. It's run its course.
Yeah, and that's another thing people get wrong is inflation. And I speak about this several times. I've done many videos about the definition of inflation. I even have an old Webster's dictionary from the 70s, and it says that it's an abnormal increase in the supply of money and credit resulting in higher prices. But now they've changed the definition to mean the CPI or the PCE. Maybe you can go through that a little bit, and how the central bankers and the politicians, they're fooling people into thinking there's no inflation while there's trillions in inflation.
Well, it is actually pretty simple, because when they talk about the CPI, which is the Consumer Price Index, well, they change out. So if you were eating steak and steak gets really expensive, well, if you can't afford the steak, you'll buy hot dogs. So they just change it out. So it's not a real number anyway. I would ask people really to look at their personal experience. And if your cost of living, I mean, has that stayed the same since 2008? Or even a year ago? Has it gone down, or has it gone up? Has it taken more dollars to buy the same goods and the same services? It costs you more. Look at education, look at insurance, look at, well, maybe not gas prices. They've been going like kind of nutty, but food, what's been happening through this, you see, with inflation and all the money that the governments and the central bankers create, the new money that they create, well, with things like food, or with gold and silver, or lumber, or steel, or anything tangible, anything physical, there's a finite amount of that. Whereas with fiat, that they push a button and whoop, there's 30 trillion more dollars out there. I mean, that takes no labor, it takes no effort, and it's cheap. I mean, that's a button push versus having to go in and mine and use that energy and pull that gold out of the ground and then refine it into bars and then used across the entire global financial system. Whether you're looking at manufacturing, or you're looking in finance, or you're looking in food or medicine, etc. So, inflation, the big experiment really started in 1913, and that was the first time historically when a central bank had attempted to control the rate and speed of inflation, which is why it's been able to go on for so long. Because they felt like if they could keep it near that 2% target, then it would happen. Everything would cost you 2% more a year, but it would happen slowly and you wouldn't notice it. Well, the difference between inflation and hyperinflation is simply the speed of that inflation. So I like to use an example of buttons. If I go into your house tonight, and I do this over 30 years or 50 years, every night I take one button. Well, I'm going to end up with all your buttons, but you won't notice it as much. Whereas if I go into your house tonight and I take 98% of every button in your house, chances are pretty good tomorrow you're going to notice all those buttons are gone. And I have them all. And that's really what the whole system is based upon. Let us rob you slowly enough so that you don't notice it. But since we're at the end of it, the only thing left is to hyperinflate the currency away. And all of the inflation, much as they don't want us to think that there's been any inflation, all of that new money has been going into the markets. I mean, look at, we're making new highs, or we're close to all-time highs. Let's see, does anybody have any idea how much these corporations are actually going to earn?
No, we don't. I saw yesterday that Apple now is worth $1.5 trillion market cap, and the Fed's still buying their bonds, which is ridiculous. The other thing I would say, the inflation, you're talking about the buttons. It's a little bit like boiling the frog, isn't it? You do it slowly.
Exactly.
I think we're at the end where we're running out of buttons, and the frogs are starting to feel the heat. And I think a lot of what's going on as well, socially and with the crisis this year, is a lot to do with the fact that the powers that be know that the system is in its last legs. Because you look at France in 1790s, you had the revolution. France was bankrupt, so they created the assignats. They hyperinflated that. Same thing in Germany after World War I. It was, the politics was so unstable after World War I. You had the Kaiser had abdicated. Germany was in turmoil, and they had huge debts as well, which is very familiar to today. So I agree with you. I think we might not see interest rates spike because they can print the money to buy bonds. But I think the way it's going to manifest itself is in a higher gold price versus all the fiat currencies.
Yeah, no doubt about it. I mean, gold has been making new highs in, I think, pretty much every other currency other than the US dollar. But I think it was Thursday where gold broke a key resistance level. And so I think now you're going to see on the spot market, which honestly is just a contract. And so people look at that and go, oh, well, gold's 1,800 or whatever. That's the Wall Street contract. That does not reflect its true value for this reset. But it does technically indicate that we are going to a higher level. And I've even been hearing some on CNBC this morning talk about gold at 1,900, the spot gold contract at 1,900 by Labor Day. And that would not surprise me.
I would even say maybe before that. But yeah, the spot price, for example, there's the futures. Yesterday, people were saying, gold broke through 1,800, but that was the August future. The price I look at is the physical, and even that is a paper price, I would say. It's what the banks trade amongst each other in London and New York, the bullion banks. You know more than I do, to buy an ounce of gold now, if you're an individual, it's going to cost you probably more than 1,900. I don't know. Here in the UK, it's costing a lot more than the spot price. But I saw that yesterday, the last day of the quarter, gold closed above 1,772, which was the highest quarterly close back in 2012. So that was a good signal, because we closed, I think, around 1,780. This morning it was doing well, but as usual, when the US comes in, gold a lot of times seems to go down, and it is frustrating. And I've experienced this since 2002 when I started buying gold. But if they could manipulate gold forever, or with no if they could do it, gold still be at $35 an ounce, and it isn't. So Uh, I would say to a lot of the viewers that they need to be patient. What do you think?
Well, I agree with you. This is a trading mentality, and that's what you're looking at on the spot market. But yeah, as long as it would benefit them to suppress the price of gold. And why isn't it trading a lot lower than where it is right now? Regardless of the fact that central banks globally have been buying it at the fastest pace since they started tracking, how much central banks were buying. Why are they buying it? Because they know what they're doing to the currencies.
Yeah, the other thing I think the mainstream media like the Bloomberg, CNBC, and investment advisors, they try to tell people that gold is risky. And then when you see all the choppiness as well, it puts people off buying gold. I think this is one of the reasons why they manipulate. It's not to keep the price down in particular, but just to scare people off. So
Exactly.
yeah.
Because you're right. A rising gold price is an indication of a failing currency. And they don't want you to understand that the currency is failing, because then you would make different choices. Like personally, we're both in Wall Street, kind of. Well, you were in the city of London, which is so fascinating to me personally, that you were part of that. But I was part of Wall Street too. And so, when you live inside the belly of the beast and you see the different things, I mean, stockbrokers are not trained in really understanding the technical language of the market. They're just really salespeople. So somebody over here tells them what to sell and what to say, and then they just spit it out, rather than doing real due diligence to make sure that they do understand it, so that they can enable their clients to make educated choices. And it all trickles down. It's been really interesting for me, the feedback that I've gotten from our consultants, with people trying to call their stockbrokers or their financial consultants or whatever that title is going to be, and when they want to liquidate, and what a hard time they're getting to, in doing that. When I was a stockbroker, if I wasn't available, I had an assistant. If they wanted to buy or sell something, they could go to the manager. I mean, and if I got instructions to do something, it needed to be done right away. Today, it's like, well, he's on vacation or she's out to lunch. I mean, I can't believe what I'm hearing. And do you really know these? I mean, banks with wiring funds and doing all of that. I mean, they're doing everything that they can, the whole banking system, to keep that money in the fiat system, because it's a whole lot easier to steal.
Yeah, that's right. And in the UK, for example, the FCA, which is the regulator, the equivalent of the SEC, they don't consider physical gold a financial asset. In the UK, a gold sovereign is actually legal tender. So if you ask your financial advisor, oh, I want to invest in gold, he won't tell you to buy. He will know nothing about physical precious metals. He'll tell you to buy ETFs.
Right, GLD.
I
have a bunch of gold sovereigns. I love them.
Yeah, they're great coins. I mean, I heard that U.S. Pilots, when they go on missions abroad, the U.S. Air Force, they carry sovereigns, especially in the Middle East, because they're quite, they're acceptable over there. If they crash and land in enemy territory and they need, they can't use dollars, they use the gold sovereigns.
Yeah.
I wanted to, yeah, go ahead.
Well, I wanted to make another point, because in Zimbabwe, their currency is yet again collapsing, the new one that they came out with roughly a year ago, and they've halted the stock market as their currency was again hyperinflating. Their stock market went up. It's a beautiful chart. People would be going, yay. But then they halted all trading on there, waiting for authorities to decide the fate It's like
And
people don't realize they think they can sell whenever they want to. You know, my concern is not whether or not the stock market's going to go up, because when these central bankers create new money, I mean, that's where so much of it is going.
you won't
So
know
yeah,
what the value of
we
the
know
stock market will be, will you? And
the
these
real
people,
value.
yeah, these people in Zimbabwe are waiting now. They don't know, they're thinking, oh, we've made a bundle of money in the stock market, and then the next day they're going to realize it's worth nothing.
Exactly. Gazillionaires that can't buy a loaf of bread. And also, you know, maybe they're not even going to have access to it. You know, you push a button, done. I mean, we saw that a lot in the US in March with all those trading halts. You know, I mean, do people not see that it's really easy to go, boom, done? Who are you going to complain to? Who are you going to call? There's nothing you can do when that happens. There's nothing that you can do when the stock market implodes. I want my money back. Yeah, well, good luck to you.
Yeah, I traded some options in February and March, and I did well, but a lot of times I had to wait because if the stock market was limit down, they weren't quoting the options. So you need to be really careful. This morning I spoke about some trades that I put on in GDX, ETF, and GDXJ, but I did emphasize that it's a small amount of my savings, and you need to try to keep as much outside the system. I agree with you. I wanted to bring up a subject that you actually made me look into it, and even though I had, when I worked in the city, I was a futures and options broker, and one of my best clients, he used to set the LIBOR rate for a big bank, and he used to trade the Eurodollar futures with me. And the Eurodollar is not the currency; it's a 3-month interest rate future that is based on LIBOR. And I remember just before I left the city back in 2011, 2012, I asked him, so you're still trading a lot of Eurodollars. How's the LIBOR market? And he used to tell me, yeah, we set these rates every day, but it doesn't exist anymore, LIBOR. And I thought to myself, it's not a problem anymore. But then you were bringing this a subject up quite a bit last year. So earlier this year, I did a video in February, and I looked into it and realized that the regulators, the central banks, especially the Bank of England and the Fed, they're still really concerned, and this was in February, that a lot of the dealers on Wall Street and in the City of London, they still had or still have now this LIBOR addiction. They're still using a rate that is based on nothing really that exists out there. And they have until the end of 2021 to wean off LIBOR into SOFR, which is the dollar one, and SONIA, the sterling. And I looked into it, and it looks to me like the repo problems last September could be related big time to the LIBOR, because even the governor of the Bank of England, the new one, Bailey, he took over in March. He was the head of the FCA, and last year he went in July to New York to warn the Wall Street about LIBOR. And what happened 2 months later? We had all the repo kickoff. So could you tell the viewers a little more about the LIBOR? Because I think
I actually would really love to, because you know there's been this kind of quasi race to create a new benchmark, and you made a good statement. In the US it's the SOFR, and they were having a lot of trouble, because what they have to do, it isn't just they create this new benchmark, but they have to create a trading market, because as you pointed out, the LIBOR was just a stated rate. Oh, this is what I think it'll do today. So it was easy to manipulate, and they could keep that hidden until it got leaked. I think that was really what forced everybody's hand, was that the fact that it was a completely stated and then really manipulated rate that guides credit cards and mortgages and auto loans and student loans and every kind of debt out there. So there's been a race not just to create a new benchmark, but you have to actually create a new market for it and get large entities to adopt it and use it. And the Fannie Mae or Freddie Mac, one of those guys, did that quite a bit. They were issuing new bonds that were based upon the SOFR. And what I think is like extraordinarily interesting that just recently happened was the Federal Reserve in all their alphabet soup programs. This, to me, seemed to be like the perfect opportunity to establish the SOFR on a very broad basis, because of all of those loans, they could have dictated that they were all tied to SOFR. And particularly the three that they just came out with, the Main Street lending programs, he tied all those hundreds of billions of dollars or so to LIBOR, undermining it because they really weren't ready for this transition. So you've got something like, I don't know, 300 trillion or more contracts that are tied to this rate that, as you pointed out, really doesn't exist. It's just a group of people going, this is what it should be. And, you know, it makes me really question, well, I never really thought that they would be able to pull that big experiment off to begin with. But I think it's really an indication of how badly off the whole circumstance is, that he couldn't have, that Fed Chair Powell could not have taken this opportunity to really create that market. And
Yeah.
he didn't. He backed off.
Well, one of the things I realized when I was looking at it earlier this year is that the reason the dealers and the traders are not playing ball is because LIBOR, for example, is, SOFR is a secured overnight loan. And the LIBOR is usually unsecured. And it's usually for 3 months, 1 month, and 6 months. So what the dealers are saying, it's very hard to switch to a secured and overnight. So I don't think the regulators and the central banks, they basically replaced an apple with a pear, and that's the problem. And like you said, I mean, there's
It's a very
also,
good point.
yeah, you said in one of your videos there's 300 trillion in derivatives priced off LIBOR, but when I looked earlier this year, they said it in the FT was 400 trillion. So I think this is still a big problem. And I think the crisis we're under right now, I think that they're going to extend it. And I think they're going to use it as an excuse just to basically wipe out this whole market and start from scratch.
Yeah, absolutely. And I'm kind of curious. I know you're interviewing me, but I am kind of curious. I know that they came to some kind of an agreement, the City of London, that really that's where most of the derivative trading is done anyway, because then they can use the same assets an unlimited amount of time. But I also know that you guys are about to go through a hard Brexit, and I'm kind of curious how you think, now that you've looked into this more, you know, how that might tie into this looming financial crisis.
Yeah, I mean, the hard Brexit, it's going to hurt, I think, but one of the some people think the UK wanted to leave the EU because the EU is going to start regulating a lot more offshore centers, and all the offshore money, I think 2/3 of it flows through the City of London. It doesn't stay here, but all the big banks and hedge funds, they trade as advisors. Well, they're basically here, but they're domiciled in Turks and Caicos or whatever, but it all goes through here. And I think that's one of the reasons that the UK wanted to leave the EU. and the hard Brexit could have a huge impact on that as well, because it could. Uh, it's not going to be a friendly exit from the
Right.
EU, and the EU
And and whatever happens there happens everywhere because the banks are all incestuously intertwined.
Yeah, and a lot of the big European banks, the French banks, German banks, Italian banks, they all have offices in London. And like you said, people can rehypothecate. They
Yeah.
can leverage to their heart's content in London, while in New York, I think it's just 3 to 4 times or something
Right.
like that. Yeah.
Yeah. Can only use the same collateral 3 or 4 times. Gee, that's awful. Let's do it an unlimited amount of time. I mean, you can't make this stuff up. And if you tell somebody this, well, shouldn't that be illegal? Well, it's
Yeah.
a contract. And if you didn't read the contract, and you know, I mean, how easy is it to even really get all of the information? The ISDA is the, you know, oversight body, but it's made up of the same guys that created the mess.
Yeah,
I mean,
they're just an association of all the dealers in the city on Wall Street, and I would say the rehypothecation is one of the reasons why the LBMA in London is such a big part of the gold manipulation, because the central banks, and that's why the Bank of England keeps 5,000 tons of gold. The UK only has 300 tons, but for some reason, all these other countries, they keep all their gold with the Bank of England, and they lend it out to the bullion banks, and they rehypothecate it, and they short it into the paper market.
right. And that's an easy way to make it look like there's a whole lot more gold than there really is. But that also goes back to the premiums. And I mean, somebody asked me, so what's going to happen to the premiums? Because they can do anything with the spot price. That's cheap and easy. That's a button push. That's nothing. But, you know, I think that the little taste that we've gotten of in March and April of the premiums on physical gold and physical silver, I think they have to go through the roof, because you have all that paper money or digital money chasing a very small I mean, I'm not selling my gold, I can tell you that. Central banks aren't selling their gold anymore. Not one of them said they're going to sell their gold. They're going to buy more or keep what they have, but most of them are going to buy more. So, you know, and they're already buying what, 20%? Is it 20% of the production?
Yeah, and I remember back in Brazil when I was growing up, my parents were always talking about the dollar and the local currency, and I was still quite young, and I couldn't understand why there's a parallel rate, and then I learned, of course, that the parallel rate was the black market rate. So if you went to a bank, they'd give you, let's say, for $1, they'd give you 10 cruzeros. But if you went to let's say, a travel agent, which was basically where they did it for you at the real level that people wanted to do in the market, you could get 20 cruzeros for $1. So I think the same thing is happening to gold. That paper price is what the banks are making their prices. It's not real price. Unfortunately, it still affects the price at which you can sell to dealers. But I think that could change as well. And I remember in 2008 when gold dropped like from just above 1,000 to like 700. You couldn't find physical gold, or if you did, the premium was like 15 to 20%. So people who are waiting for a big correction, I think they're gonna be waiting for a long time, and they'll never get a hold of it.
Yeah. I don't think it's time to wait at all. And during that period of time, we still could get, and even during March, et cetera, we could still get at ITM the gold and the silver, but we had in 2008, it was delayed delivery up to 3 months, where normally we're shipping within 48 hours. I mean, under normal circumstances, you know, you buy it and it ships right out. But when there's a big rush like there was, and the same thing happened in March and April. Our whole, fortunately, I mean, there were things that we couldn't get, but we could still get gold and silver. The premiums, you were going to pay the premiums for it. And I think in some cases there was, again, delayed delivery, but at least the wholesalers would let us, sell it. So you could buy it, and you always got delivery because they weren't going to put their necks on the line. What do you think it's going to look like this next go round with everything that just happened in March and April? That gold and silver is not coming back on the market.
No, and there's still a lot of clouds hanging over about this crisis. They keep bringing up, the second wave, and we also have the elections in the States. There's a lot of uncertainty. So to wrap up, Lynette, could you tell my viewers a little more about your business and maybe how they could get in touch with you if they're in the U.S.? I don't know if you do business for other countries.
We don't, because it's just too hard to I mean, we do if you come into the U.S. There are ways around it, but we don't ship to foreign countries just because it's really complicated and very expensive to do, and not our cost of shipping, but your cost of receiving. So we do kind of stay local to the U.S., and we are a physical gold and silver dealer. And what we really specialize in is planning. And it's based upon my personal studies of currencies and that repeatable pattern. So we like to create plans for people, right? And gold and silver at the moment are at the heart of it because it's the only undervalued asset that there is. We're super keen on education. So we have a YouTube channel, ITM Trading, or you can just search my name and I'm sure it'll come up. And, I post things there regularly, a minimum of 3 times a week, but very often a lot more, because I like to do a lot of Q&A, and I like to make sure that if somebody asks me a question, I answer it. So, and other than that, they can get a hold of it. We love human contact. I will say that. We love human contact, and they can call us at 888-696-4653 or go to our website, itmtrading.com. And in my work, I like to make it easy for people. So if you go to the YouTube channel, what you're going to find is on our blog, I have the links to all of my research. So, I don't want anybody to take my, just my opinion randomly. I want you to be able to hold my toes to the fire, but I feel that way about everybody else. They just kind of, if a banker tells them something or the Fed tells them something, oh, well, then, but how many times can you be lied to when you do not know the truth? That's my favorite question. And so we like them to know the truth. You come up with a different opinion? Okay, I'm not going to say your opinion is less valid than mine, because that's all I can really give you is an opinion. But it's an educated opinion, and here's how I created that education, and I encourage due diligence. Hold everybody's toes to the fire. So that's who we are.
Great, Lynette. Thank you for taking time to speak with me, and I hope to speak with you on your channel soon.
Absolutely. It was a pleasure. Thank you very much. This was I'm glad that we talked about what we talked about today, especially the LIBOR. I think is critically important for everybody to know. They look at this crisis and the coronavirus, but the truth of the matter is the end of the system is really near. And what do you want to be holding when it becomes visible to everybody? For me, I want to hold physical gold and silver, real money that I can convert into the new money. And as you really pointed out so well, it's universal money. So those pilots, they've got those sovereigns in their pockets. They can go anywhere in the world and boom, have purchasing power. And what we're dealing with here is the same.
Yeah, and just to finish off, I don't think the 08 crisis, they didn't fix anything. Thanks again, Lynette. Have a great rest of the day.
Thank you.